Welcome back, investors, to Ticker Time News. I'm Adam. There's a company that 2.7 billion people use on a daily basis. The company continues to make significant R&D investments in virtual reality and augmented reality. They continue to outpace expectations on sales of its most advanced all-in-one VR system to date. Their commerce segment and associated verticals continue to ramp up in response to the pandemic. Opportunities in commerce will be a significant driver for long-term revenue growth. And whether you like this company or not, growth will continue for years to come. I believe that over the next 5 years, the stock price will double from where it is today. Now, who is this mysterious company? Well, it's none other than the Michael Jordan of social media, Facebook. Few publicly traded companies extract such a broad spectrum of responses like Facebook does. For investors willing to accept a high degree of headline and legislative risk, Facebook provides sustainable earnings growth at a discount that seems to be driven more by public opinion than financial results. Like it or not, Facebook's family of applications is being used by over 2.7 billion people each day. The relevance of these applications has been strengthened by changes in social habits as society adapted to the pandemic. A true paradigm shift has taken place in the way people interact with each other and with businesses. The pandemic accelerated the pace of e-commerce adoption and the rise in the number of online stores. Built on the success of Facebook Marketplace, Facebook Shops was launched last year, recently surpassing 1 million monthly active shops and 250 million monthly shoppers. The commerce segment and surrounding verticals will be a significant source of Facebook's future revenue growth. As a response to the pandemic, customer-to-business messaging has exploded. More than 100 million messages are now being exchanged daily over the WhatsApp Business API. As a way to monetize the additional interaction, Facebook has now introduced click to WhatsApp ads, implementing a similar strategy to what they did with Messenger. The new capability has already been adapted by 1 million advertisers. Facebook continues to expand and develop its e-commerce ecosystem with management's ongoing focus to broaden the offerings available through WhatsApp Business. Recent success includes crossing significant legislative hurdles, bringing WhatsApp payments to India and back to Brazil. Facebook plans to deploy $20 billion in capital expenditures this year, an increase of $4.3 billion over last year. A majority of Facebook's growth in CapEx is earmarked for development in augmented and virtual reality segments, as Facebook CEO Mark Zuckerberg compares investments in AR and VR with building the next computing platform. Zuckerberg is eager to expand on the improvements made via the Oculus Quest 2 and Oculus Air Link. Since being released in October of 2020, as the level of integration between AR, VR deepens across Facebook's social and commerce applications, the number of possible verticals will remain abundant. Are you finding value in this video? Then the best thing that you can do is like this video, share this video, and subscribe to join our family of investors. Because we don't have the marketing budgets of the mainstream finance media or the clout to be propped up by YouTube, so your help is greatly appreciated. Now, let's get back into it. When it comes to monetizing a digital transformation, Facebook's management has a proven track record. And there exists a vast opportunity globally for future growth outside of ads. It's coming from the increasingly important commerce and AR/VR segments. Facebook seems poised to exceed earnings growth expectations over the long term. Now, public relations anxiety will continue to reduce Facebook's earnings expectations and valuation multiples, but this will benefit investors. With a PEG ratio of 1.12, the shares have room to rise before long-term valuation ceilings begin to come into play. Momentum is another factor that will benefit investors. Fundamental analysis provides the framework for where a company's valuation range would lie under a given set of growth assumptions. However, for any price target to materialize, other investors must also recognize the profitable prospects for the company in question. As positive investor sentiment rises, and so does the demand for the firm's equity, measures of momentum on other technical analysis tools provide a way to gauge the level of investor recognition. Charts can reveal rising analyst investor expectations and the presence of material catalysts beginning to become reality. Since debuting at $38 in 2012, Facebook has outperformed the S&P 500 in 8 out of the last 9 years. As you would expect, when taking into account FANG's sizable impact on the S&P 500 over that period, Facebook also has consistently performed well on a risk-adjusted basis, falling short only twice in 2016 and again in 2018. Post-IPO, Facebook has risen by over 27% on an annual basis, while the S&P 500 came in at 13.6%. Assuming a beta measure of 1.5 over the last 9 years, the 5-year average is 1.3. Shares of Facebook have averaged 7% of alpha each year. Shares of Facebook had a rough start to 2021, as did most other tech stocks. But after locking in support at $255, the chart has remained very constructive. At the end of June, Facebook surpassed the exclusive $1 trillion valuation mark, and this week, Facebook set a new 52-week high as companies like Twitter and Snap blew away earnings expectations. Now, everyone is set for Facebook to beat expectations when they release their earnings report next week. In the short term, Facebook is on a path to breaking the $400 a share barrier. So, when looking to find an entry point to start or grow your position in a stock that can break out and move fast like this one, look for the stock to test and bounce off the 50-day moving average. That's the best way to find your entry point into Facebook. My price target for Facebook over the next 5 years is $700, and Facebook's prospects for future earnings growth appear quite attainable, here and abroad. Remember, 90% of Facebook's users are outside the US and Canada, yet they only account for 55% of total revenues. The runway for monetizing future revenue growth is long for Facebook. And when you put all of this together, I am also long on Facebook. Now, I ask you, what do you think about the future of Facebook? And as always, if you've watched till the end, you, my friend, are totally awesome. Thank you so very much for watching, and I will see you in the next video.